So I'll be showing you how I use Fibonacci in my trading. It's a tool a lot of traders get to use in knowing when trends or moves are getting exhausted. I'm basically going to teach you how I get to use my own Fibonacci, and I'll show you my settings. So the purpose of Fibonacci is to know, the extension as to which a move still has to go, or the immediate reversal or correction it's going to have. Let's say it pumped highly right now, like let's say like Ethereum. People like where it pumped from have to take profits. So usually like the level is going to dump back to before like getting on the next leg. Fibonacci tool is a very good tool to use to track retracements. You miss an opportunity where where to wait for to find where you should get into again and not just buy at the top. So perfect example I want to quickly use for this is Ethereum that pumps. Now somebody will see this and be like, oh, let me jump in on Ethereum, it's pumping this, that, yada yada yada. But I don't suggest that. I put in my fib retracement. You can get it from on here. Fibonacci retracement, okay? When you click it, usually you're drawing from the last, swing low to the current swing high. Are you there now? These are the settings that you have to copy. So pause the video and make these remarks, make these changes on your trading view. And scroll down to the bottom. This is how it is. So set them accordingly. And I'll explain to you like how I get to use them. Now, the 38% region, it's price reverse there is kind of a weak support level, but like it's where you should know that when price gets there, you should be gearing to start studying the price action, the candlesticks, to know when to know when like the tides are about to turn and continue the leg up. Are you getting me now? Seeing this, obviously right now, of course, since it pumped, it has already like dropped a bit. But if you had drawn this when it ETH pumped initially, you will see that guy. Don't hop on it right now. Don't hop on it. Wait for the pullback. You should rather buying like at the bottom than you are buying at the top, because you have all this room. If price dumps from all the way this level to this level, that's nine. This is 9%. So if you're rushing to just buy at this top, you have this 9 floating percent to just, which is that eventually price will come above, but okay, that's time already. So you rather just wait. If you're buying around here, this area, you know that okay, things will be moving up from here on out. So the level where this movement will be exhausted, if it does do cross this place, is around here. So 50, I just explained 38%. 50 is still kind of weak. 61% is the golden ratio level that they put as okay, this is good. When price gets here, like best believe it's going to like reverse and work out well, back up. The deeper it goes to 78, 78 region is more like, man, go sell your parent, your family land and assets, because like y'all making out the trenches with this one, but don't quote me on this. That's non. This is NFA. NFA, my opinions that work for me. Don't hold it to my neck. I did not send you a message, but work with discretion, or how do they say it? So yeah, and these levels, the minus 27, the minus 61, these are like the extension levels that it gets to. When prices getting to these two levels, you know that the momentum is about to start getting exhausted, and you should be looking to pull out, take out your profits, and wait for like further dump and further market recalibration. So I just wanted to make a quick video on it. So any questions that you might have that I should clarify, you could send me, you could make a comment. If you like the video, like it, make a comment, drop a comment below. If you want me to talk about something specific that you'd like to know, hit me up, feel free, and I'll make a video on it. As always, have a good rest of the day. Peace. All right. Now that was done and dusted.